In this video, we are going to be analysing MF Global, ticker MF. Now, this one is quite interesting. We did see this, especially where I got it from was on StockTwits. A lot of talk about this stock, but also it did close up actually 57% on Friday. So one thing we can see, and is always important to look at the bigger picture of these stocks, going out a year, you can see this stock had a high of $165 and now it's at $2.50 with a 52-week low of $1.50. I haven't done my fundamental analysis stock on this, but you should know fundamentals are always at the key driver of a stock, and if a stock sold off this much, that is down to a fundamental reason. So if you're looking to do anything longer than day trade this, be understanding the fundamentals, because there is a reason the stock's been injured this much. But also, if you are day trading, be keeping an eye on the fundamentals, because these kind of stocks move very hard off fundamental news. Obviously, that's how the market moves, is off fundamentals. But if you see anything come out on this, it is a rumor, confirmation, denial, whatever it is from this company, you are going to see a big movement in this stock. It wouldn't be unlikely to see this stock move 100% up on a day, but it also wouldn't be unlikely to see this stock lose something like 50% in a day. So do be careful when trading a stock like this, because you can easily make and lose a lot of money. But to get onto the technical side of it, what are levels we are paying attention to? And one thing which is kind of difficult with this stock is using the longer term time frames, which is what we like to use because they are the stronger time frames. We can see we have our first deviations at $9.75 and $20. Now we are at $2.50, so this requires the stock to go up 400% from where we are now just to even hit our first deviation. So we will leave those two levels there just so if this stock pops for any reason. These are levels where we definitely expect selling pressure to come in, and they would probably be a good short location if you were just looking for a quick day trade or short-term swing. But again, personally, I don't trade small caps, so I won't personally have a position in this stock. But because these levels are so wide, and this is because the stock was at $165 and now at $2, that has made the deviation so wide that it's probably unrealistic to hit those in any reasonable time frame. So instead what we will do is we will use a 20-day and a 30-day chart, because these can give us closer levels and more reasonable levels to where we are currently trading at now. So here now, if we do continue to the upside, we do have resistances at 270, 290, 320, 345, 366, and a final one at $4. So if we do continue this upward momentum, those would be the key resistances I would be paying attention to. Now, on the other hand, if we want to be paying attention to supports, we're looking at 238 and 225. Now, these are first deviations, so if you're looking to get in this upward momentum, if you think it's going to continue, these would be the pullback locations that we would look to buy and play the move to the upside. But obviously, you are always taking risk buying at these kind of levels because you are still above the statistical mean. And when you're buying above statistical mean, especially when you look at stocks in a mean reversion rate such as I do, you are always buying at a premium. So you have to always manage your risk if you are buying. Well, I mean, you always got to manage your risk anyway, but especially have a tighter stops when you're above the statistical mean, because in these kind of stocks you can see them crash very quickly when they're above statistical mean. And really, here is a great example. You saw it hit that deviation, the $4, and it crashed within after hours. I mean, this is what about 4 or 5 hours. It crashed over 25% down to around $3 to around $2.80. So you do need to be careful in buying above these statistical means, because it's going to crash a lot higher when you're above these levels. But now, if we do continue down even further, we are paying attention to 285 and 175, as this is statistical mean. Now, if you were shorting the stock, this is where we would have our final target. We don't ever look to hold past statistical mean, because then it turns into a lot more of a gamble. Once you come into this level, you are considered fair value. And then really, from there, any direction is possible. And that's why we tend to stay out of the stock and then wait for it to move to the direction before touching it again. And so if it continued further down, we would be looking at 130, 85, 75, and 35 cents as lower levels, and support levels is the things we would be focusing on. Obviously, 35 cents, even though this stock has sold off so much, probably not all that reasonable in the near future. So the key focus we would have as of now is we will most likely pull back, and we have kind of started to see it pull back, but it's can we come and test this 238 to 225 support, and if so, are we able to hold it? If so, expect continuation to 270 and most likely 290. But on the other hand, if we break below that 225, we come back to retest it, meaning obviously we break below, maybe come to like 210 or so, come back to test 225 and selling pressure still kicks in, then expect a move back to its statistical mean at 185, and then really it wouldn't be something we would be paying attention to until it can move back away from that mean. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out one of these two analysis videos.